Today, a mounting energy crisis as oil prices hit record levels and coal and gas prices rise too. How are producers adapting? 3 economists based in America get the Nobel Prize in economics. What have they done for the field, and what are critics saying? And Southwest Airlines says services will be back to normal this week after canceling more than 1,900 flights over the weekend. What's going on? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. Prices are still rising in America and around the world. How will governments and central banks react? The cost of organic American soybeans has surged to record highs. It's significant because soybeans are used to feed livestock and make other products like soy milk. It's already triggering price increases for consumers. Prices for organic soybeans delivered in the Midwest reached around $33 a bushel in September, a new all-time high. Container shortages and log jams at U.S. ports have sent shipping costs to record highs. The United States imports about 70% of its organic soybeans. Domestic production just hasn't kept up with growing demand. As a result, organic chicken producers in the United States have already raised prices, with more increases expected. Oil prices are also still rising, turning up the heat on a global energy crunch. U.S. benchmark crude is up about 1.5% for the day, going above $81 a barrel before coming back a bit. That's on top of an almost 5% gain last week. Some are blaming a global push to clean energy for discouraging investment in oil projects. Others say because all commodities are more expensive now, it's simply a case of the dollar losing value as the money supply is increased. U.S. crude is now up for 7 straight weeks. Coal and gas prices also higher, making oil more attractive for power generation, adding more pressure to prices. In China, the government has ordered miners to ramp up coal production amid shortages. In India, some states are experiencing blackouts because of a lack of coal. And in countries across the Northern Hemisphere are wondering if they'll have enough energy as winter looms and heating demand rises. So joining us to discuss rising oil prices is Russell Greenberg. He's the founder at Altus Capital Partners, a private equity firm. Greenberg also sits on the board, is also the chairman of Thompson Plastics. Russell, great to see you. Thanks so much for coming on the show. I suppose plastics and oil really go hand in hand. How are you guys looking at the rising prices? How are you going to adapt, and what should consumers look out for downstream?
Okay, good to be with you. Yeah, this year has seen a lot of increase in resin prices due to both supply shortages, the storm in the Gulf back in March, and now we're seeing oil prices top $80 a barrel. What you see in the plastics industry, since plastics resin comes from oil, is increased prices of resin, which feed into higher plastic inputs. And generally, plastic producers like my company, Thompson Plastics, and others pass that right along to the customers. Raw material prices are traditionally a pass-through. Sometimes it takes a quarter or 3 months, but those higher prices, which are up about 56% on the year, are passed along to industrial buyers and ultimately to the consumer.
We have various economists debating whether this is transitory, whether it's going to stick around for longer. Looking yourself at the various elements behind the scenes, what do you think?
I don't think it's transitory. I think it's here. There's a number of my portfolio companies, we're seeing wage pressures. You know, you go to the grocery store, you get food pressures. You know, you've got the Fed printing massive amounts of money. As you know, the money supply is way up by trillions in a year. That's a monetary effect that's going to continue to drive prices. So I don't believe inflation is transitory. I think it's going to be in this 5 to 7% range for a couple of years.
Wow, incredible. I have a feeling myself as well. And we see, I'm sure you guys have lots of inputs that you get from abroad as well. We see the ships lined up at Long Beach. Are you seeing more companies start to bring some manufacturing home, at least looking to bring production back in-house in America, and how's it been going?
Okay, that for sure there is a reshoring effect. At Altus Capital Partners, we've been talking about the reshoring, working with our companies for a couple of years since the middle of the Trump presidency about reshoring. It's real. Several of our companies are benefiting from reshoring since we invest in U.S. manufacturing. Specifically, Thompson Plastics was the recipient of a large reshoring contract for an electric lawnmower company. They've reshored their production of all the plastics from Asia to Thompson, Georgia. And we're just having a hard time keeping up with the demand. So that's a huge contract there, and we see a lot more reshoring happening at a number of our companies, particularly also with the concern, not only the shipping issues out at Long Beach, but the issues with China in general.
Incredible, really encouraging to hear. What are some of the limitations? We've had some manufacturers come on and say, really, it's hard to get the talent, the workers to actually build this stuff.
No question. That's the biggest issue we see in all of our portfolio companies, is getting people, be it people on the floor running the machinery, the presses, or just working on the engineering. It's just people are a big issue today. It's not a demand problem, it's a supply issue.
So what's the solution? Is there a short-term solution? Is there a long-term solution?
That's an excellent question. I think, maybe more training, just some more time, more robotics, automation. That's what we're pressing for, is to put more automation in all of our factories. But that's not a real short-term, that's a mid-term solution. It'll take a couple of years, and that will definitely improve efficiency of U.S. manufacturing, continued push for automation.
Incredible. Russell Greenberg, Altus Capital Partners. Appreciate it. Thank you.
Oh, good chatting with you. Thank you. Bye-bye.
And raising the risk of stagflation, that's inflation plus stagnant growth, Goldman Sachs is cutting its U.S. growth target for 2021 and 2022. It says it was expecting more stimulus before the end of the year and more consumer spending. It expects spending on some services and non-durable goods to stay persistently below pre-pandemic trends, especially if the work-from-home trend continues. And the debt burden of the world's low-income countries rose 12% last year to a new record. The World Bank says it's because of massive stimulus packages during the pandemic. Now it's advising countries to lay off the stimulus and try to get back to more sustainable debt levels. It's worried that when or if interest rates rise, the countries won't be able to service their debts. Central banks have been artificially keeping borrowing costs low for governments by buying their debt with newly created money, but this is highly inflationary. Now, with the inflation taking hold around the world, many are calling on central banks and governments to reduce stimulus and fight the rising prices. The challenge is, reducing central bank stimulus means borrowing costs for governments will go up as interest rates go up. The World Bank says that's something many small and medium-sized countries won't be able to bear. And on Wall Street today, stocks gave up an early gain and ended lower. Most sectors ended in the red, led by tech companies and banks. The Dow dropped 250 points, about 0.7%. S&P 500 lost 30 points, also about 0.7%. The Nasdaq fell 93 points today, about 0.6%. And the Nobel Prize in Economics was awarded to 3 American-based professors today. The Nobel Committee says their approach has revolutionized empirical research. NTD's Faye Quarter has more.
The Royal Swedish Academy of Sciences has given out the Nobel Prize for Economics, this time to 3 U.S.-based recipients.
With one half to David Card for his empirical contributions to labor economics, and the other half jointly to Joshua D. Angrist and Guido W. Imbens for their methodological contributions to the analysis of causal relationships.
The winners pioneered the use of natural experiments, where individuals are exposed to conditions determined by nature rather than laboratories.
Natural experiments are everywhere. So thanks to the contributions of the laureates, we researchers are today able to answer key questions for economic and social policy.
David Card is known for a study where he found no fall in employment when the minimum wage rose.
In the area of the minimum wage, there's been just an enormous amount of research in the last 25 years. Reevaluating that evidence and thinking about it carefully and evaluating the whole thing from a more scientific view, not from an ideological point of view, I think is helpful.
The experiment took place in the 1990s when New Jersey raised the minimum wage from $4.25 per hour to $5.05 per hour. Card surveyed over 400 restaurants and found no fall in employment.
I remember seeing the research when it first came out, I believe in 1992. I was a little bit skeptical of it because it goes against what we naturally seem to think. Higher wages will lead to fewer jobs.
Michael Bussler is a professor of finance at Stockton University. He says the economy was coming out of a recession when the experiment took place, so there was an increased demand for labor. Some people also say the sample card used was not entirely random, as it focused on McDonald's, a very large corporation.
It wasn't so much necessarily the conclusions of this study, which will be debated, but the techniques he used, and from that aspect, all three of them did add significantly to the knowledge base in economics, and their contributions are now widely accepted and used.
The award comes with a cash prize of 10 million Swedish krona, which is 1.1 million US dollars. The award has been given to 89 winners over the past 52 years, starting in 1969. Faye Quarter, NTD News.
And Southwest Airlines says it expects to resume normal service this week. It's after canceling more than 1,900 scheduled flights over the weekend. There were also 1,000 delays each day. It's caused long lines and frustration for passengers across the country. Southwest blames air traffic control problems and disruptive weather, along with staffing issues in Florida. Fort Lauderdale International said the delays were due to poor weather up north. But the Federal Aviation Administration said that air traffic control issues had been resolved on Friday. There's been speculation about pilots walking out protesting a vaccine mandate, but the Southwest Airline Pilots Association says that's not the case in any official or non-official capacity. And White House COVID-19 advisor Dr. Anthony Fauci says he doesn't think passengers will be forced to get the vaccine to fly domestic, at least not in the near future. NTD's Jessica Beatty reports.
Dr. Anthony Fauci said Sunday he doesn't immediately expect a vaccine mandate for Americans flying domestically.
I don't want to say support or not. I mean, obviously, from a public health standpoint, the more protection you get, the better it is. But I don't want to be weighing in because we wind up then having people taking things out of context.
Last month, Fauci floated the idea of requiring domestic airline travelers to be fully vaccinated against the CCP virus. Right now, domestic travelers do not need to be vaccinated in order to travel. But a number of airlines are requiring U.S. employees to get the shot after the Biden administration's vaccine mandate for federal contractors. A union representing thousands of pilots for Southwest Airlines has sued the carrier to block its mandate. Lawyers for the union write the new vaccine mandate unlawfully imposes new conditions of employment, and the new policy threatens termination of any pilot not fully vaccinated by December 8, 2021. The union argues that the COVID-19 vaccines pose a unique risk to pilots because any adverse reaction could affect their ability to pass the medical requirements needed to fly. Last week, the company's CEO told workers that Southwest is a federal contractor, so it has to comply with President Biden's mandate. Jessica Beatty, NTD News.
And drug maker Merck is asking the Food and Drug Administration to grant emergency use authorization for a new COVID-19 treatment. It's a treatment for infected persons. Merck says it could reduce the risk of hospitalization or death from COVID by 50%. That number comes from a study involving about 700 patients. Merck has already sold over 1.5 million treatment courses in advance to the U.S. government and promised to offer it at lower prices to other governments. The U.S. purchased those initial treatments at about $700 per 5-day treatment course, reportedly cost Merck's less than $18 to produce each. And New York is starting to fine businesses for challenging the city's vaccine mandate. A month after the city started enforcing the mandate, 14 businesses are getting fined $1,000 each. It's after the city inspected nearly 30,000 businesses, according to the New York Post. Another 7,000 businesses have received a warning. After the initial warning, a business can get fined $1,000 for the first violation, $2,000 for the second, and $5,000 for each additional one. The mayor had to override the city's maximum penalty for health violations in order to instate a fee of over $2,000. And cafes, gyms, and restaurants in Sydney, Australia welcome back fully vaccinated customers today after nearly 4 months of lockdowns. The country aims to gradually reopen with high vaccination rates. Gloria Sau reports.
Residents of Sydney, Australia filed into their favorite bars on Monday as much of the city prepared to reopen after nearly 4 months of lockdown.
Okay, cheers, boys.
Sydney's reopening comes as Australia seeks to shift its strategy by gradually lifting restrictions across the country upon reaching vaccination targets.
Today is a day so many have been looking forward to. The day when the things we take for granted we'll celebrate. Being with family and friends, getting a haircut, grabbing a meal together, going to the pub and having a beer with your mates. These are things that across New South Wales and particularly in Sydney, people will be able to do again today.
Under the relaxed rules for New South Wales, Australia's most populous state, retail stores, gyms and restaurants have reopened with reduced capacity, while vaccinated people can gather in bigger groups and attend weddings and funerals. The state aims to hit an 80% vaccination rate later this month, which will be the trigger to relax distancing limits. But the unvaccinated must remain at home until December 1st. Australia's international borders have been largely shut for a year and a half. With vaccination finally gaining momentum after a slow start, the country plans to allow fully vaccinated residents to enter and leave freely starting next month.
And it looks like China's struggling property developer Evergrande missed another bond payment, according to Reuters sources. That'd be its third miss in as many weeks, and now the fears of a mounting collapse are hampering the Chinese property sector. Bonds issued by its rivals are plunging too. Bonds of Cynic Holdings, Modern Land, Kaisa Group all slumping. JP Morgan is worried that Evergrande's contagion risk is now spreading across other sectors. Some authorities in China aren't waiting to find out what happens next. Harbin has become one of the first cities to announce support for property developers. And Chinese tech firm Lenovo, its stock fell by more than 17% today. It's the biggest one-day drop in over a decade. It came after it withdrew its application for a $1.5 billion listing in Shanghai. It's just days after it's been accepted by Shanghai's Star Market. On Sunday, though, Lenovo said the validity of its financial information, its prospectus, may have lapsed during the application's vetting. Didn't explain why the information may no longer be valid, though. In a statement, the company said its business operations are in good condition as usual, and it doesn't expect the withdrawal to have any impact on its financials. Apart from that $1.5 billion it won't get. And firefighters put out a huge blaze at a major oil facility in Lebanon today. It's the latest blow to the country as it grapples with crippling economic and fuel crises. Its power supplies just came back to normal after a blackout over the weekend. Now the government says the country's two biggest power stations shut down because of fuel shortage. Jason Albano reports.
After a total blackout across Lebanon, power supplies were partially restored a day later on Sunday. The country has been paralyzed by an economic and energy crisis that has only deepened as supplies of imported fuel have dried up. Its two biggest power stations were forced to shut down on Saturday.
We used to have electricity for an hour daily. Now it's totally cut. We are spending our time outside our homes so our children can have fun. The situation is heading to the worst. May God protect us as we do not know where we are heading.
By that evening, the Lebanese army agreed to provide them with enough gas oil to secure power in the country for 3 days, according to local media. Sunday brought a return to what was normal before the power outage.
Electricity was available for a few hours, 1 hour during daytime and 2 hours at night.
Many in the country normally rely on private generators that run on diesel, like restaurant owner Mohammed Risk, though that is also in short supply.
We are surviving. We are spending from our savings and our own reserves. After a while, when our savings are over, we will not be able to continue. We cannot continue at all.
On Sunday, the country's energy ministry told importers it will issue new prices for fuel oil and natural gas on Monday to solve distribution problems. The energy ministry said earlier on Sunday it received central bank approval for $100 million in credit to issue fuel import tenders for electricity generation.
Still to come this evening. McDonald's is giving out free meals to teachers. What's the offer and how do you get it? And how would you like to see the Grand Canyon from the edge of space? The company's offering the chance from a balloon. That and more coming up on NTD Business.
%90 of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. This is a battle between truth and deceit. Subscribe today and join the Americans who are seeking truth and tradition. We'd love to have you on board.
The final end. The end of mankind. The end of this wretched world. I came as a man of peace and the world bought it. Can you believe that? They even took the mark of the beast. Fools! Why did God even make human beings?
To glorify his name. But we were fools, and many will spend eternity in hell.
May God have mercy on their souls.
But fools are fools are fools. Satan loves fools, and so do I.
Welcome back. Starting today, teachers can get a free breakfast from McDonald's. Teachers, administrators, and other school staff are eligible for the thank you meals. You just have to show your work ID, then you'll get a hash browns and one of 3 sandwiches, plus a free drink. The promotion lasts all week. McDonald's gave away 12 million free thank you meals to first responders and healthcare workers last year. And Target is using a new strategy to bring in more holiday shoppers. The store will guarantee to match any price drops for people who do their holiday shopping early. The window for price matching has already started and goes all the way until Christmas Eve. During that time, if the store lowers the price on any purchased item, shoppers can claim the new lower price. This is in addition to Target's promise to match competitors' prices for any purchase within 14 days. It hopes to come out ahead of stores like Macy's, Walmart, and Amazon, so it's hoping shoppers can shop early and avoid empty shelves. And William Shatner's played a space-traveling Captain Kirk, but in real life, he's never actually been to space. That's supposed to change Wednesday. Instead of taking the Enterprise, he's shooting for the stars in a Blue Origin spacecraft. NTD's Miguel Moreno has reactions from NASA's astronauts.
That's William Shatner there on the left, the actor who played as Star Trek's Captain Kirk. Shatner is expected to take off in a Blue Origin spacecraft owned by Jeff Bezos. A NASA SpaceX astronaut says the 90-year-old actor is setting a precedent.
I think they're all pioneers. They're taking risks, obviously. And as a result, they're expanding the boundaries for what humans can do. One of these days, we can't just have highly selected folks who train for years to go into space. We do want the situation where people can buy a ticket and go. And so, William Shatner is a true pioneer, as is everybody else has gone with the private companies.
This will make Shatner the oldest man in space of all time, a title he's expressed his dissatisfaction with. But he'll only be off the ground for about 10 minutes and go no higher than about 66 miles. Then an earthbound Shatner will parachute onto the Texas desert ground.
I'm very, very impressed that at the age of 90, he's in such a good condition to fly to space. And it's just for me a nice message that clearly tells you can never be too old to live your dream.
But reaching for your dreams can be scary. In a recent Comic-Con panel, the actor said, "I'm Captain Kirk and I'm terrified." Shatner says a friend of his had the idea of sending Captain Kirk into space about a year ago. Eventually, Amazon's Jeff Bezos got involved. Shatner's fans say they like the idea.
First off, I was an avid watcher of Star Trek the entire time, all the series, loved it, and I think it's just so awesome that he's getting ready at 90 years old to go into space. That is fantastic. I really love that whole thing.
I would love to be a fly on that wall, and because I really want to know who's going to be giving the commands when they're up in space. But I think it's fantastic for all of us. It just makes space travel so much more accessible.
According to Blue Origin, the liftoff is targeted for 8:30 in the morning Central Daylight Time. Miguel Moreno, NTD News.
And now is your chance to see the world's greatest treasures from the edge of space. A balloon company called Worldview has opened up reservations for its 5-day adventures. 8 passengers and 2 crew members will soar 100,000 feet for 6 to 12 hours at a time, but comes at a cost, $50,000 per seat. The first commercial flights will fly above the Grand Canyon. They're scheduled to begin in early 2024. Future locations include the Great Barrier Reef, the Aurora Borealis, the Giza Pyramids, and the Great Wall of China. As the latest business updates for today, you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.